Right. So we're diving into this YouTube video today, and it's from Minority Mindset, and it really grabbed my attention because it's all about building wealth and, you know, never stressing about money again.
Yeah.
And who wouldn't want that?
I mean, exactly. Sign me up.
Right. So let's unpack this video, see what kind of golden nuggets of advice we can pull out.
Yeah, absolutely. It's a really interesting video. Kind of touches on a little bit of everything.
It does. It does. It's like mindset. It gets into some specific investment types.
Yeah.
It's got a good range.
Mm-hmm. Mm-hmm.
But I think what I really appreciate is that it starts with mindset.
Mm.
Because, you know, you can give people all the investment advice in the world.
Yeah.
But if they don't have the right money mindset, the right perspective on wealth building,
Yeah.
it's not going to stick.
Yeah,
You know?
for sure. It's like giving someone like all the ingredients to bake a cake, but they don't know how to use an oven. It's not,
Exactly.
it's going to come together.
So I love that he starts with that, like that emphasis on mindset. And specifically, he talks about moving away from this like scarcity mindset,
Yes.
you know?
Which, yeah, that can be so detrimental, that idea that there's like a limited pie.
Right. Yeah.
And if someone else is doing well, it's like taking away from your own potential success.
Yeah, it's like it's a very like keeping up with the Joneses
Yeah.
kind of mentality. Like, oh, they've got a new car now, I gotta go get a new car, you know?
Yeah, or if you're doing well, it's like you're taking away from someone else's ability to do well.
Right, right.
Which just isn't the case.
And he encourages people to adopt what he calls like an abundance mindset,
Yes.
which is, I think, a much healthier way to approach not just money, but life in general.
Well,
right.
absolutely. Absolutely. It's about kind of shifting your perspective to see that there are enough opportunities out there for everyone.
Right, right.
And that your success doesn't have to come at the expense of someone else.
Yeah, it's not a zero-sum game, right?
Yeah,
Like
yeah.
there's enough to go around. And focusing on your own, your own growth, your own potential, ultimately like lifts everybody up, right?
Yeah, for sure. And it allows you to celebrate other people's successes.
Exactly.
Because you don't see it as like a threat.
Right.
You see it as like, oh, that's awesome. They figured it out. Like, I can figure it out too.
Inspiration, yeah. Like proof that it's possible, right?
Exactly.
And I think that's so important when it comes to something like money because, it's easy to get caught up in that comparison game
It is, yeah.
and feel like you're not enough or you don't have enough.
Yeah.
But when you can shift to that abundance mindset, it's like, okay, wait a minute. Like, there are opportunities out there for me. I just got to go find them.
Yeah.
Right.
Totally.
So he talks about that. And then he goes on to talk about the importance of, like, saying no.
Mm-hmm.
Like saying no to overspending, saying no to, those tempting buy now, pay later schemes that are everywhere these days.
Oh my gosh, everywhere.
I know. It's so easy to get sucked into those, right?
It is, yeah.
But he's really emphasizing, like, breaking free from that cycle of debt.
Yes, and he doesn't just say, hey, get out of debt. He, like, really breaks down the real cost of high-interest debt.
Oh, yeah, he goes there.
Like those credit card balances?
Yeah.
That so many people are walking around with?
Yeah. Yeah, he uses an example.
It does.
And it's kind of scary when you actually, like, do the math, right?
Oh, for sure.
He talks about, like, if you have a $6,200 debt at age 21, which, that's not...
That's doable. That's like a very real number for a lot of people, unfortunately.
Yeah, and if you compound that at like a 20% interest rate, which,
Yeah, credit cards, yeah.
that's pretty standard for credit cards.
It's what they're getting away with.
It is, yeah. That's what they're getting away with.
Crazy.
Over a lifetime, that could cost you millions of dollars in potential wealth just because of the power of compound interest working against you.
Working against you, exactly.
Right.
Instead of for you.
Instead of for you.
Yeah.
So that's a really powerful illustration of, how what seem like small financial decisions
Right.
in our early adulthood
Yeah.
can have this massive ripple effect, right?
It's kind of like the butterfly effect
Yes.
of personal finance.
Totally.
One little decision, could snowball
That
into
make all the difference, yeah.
millions of dollars down the road.
Yeah, so he's really hitting that point home. Like,
Yeah.
getting out of high interest debt
Mm-hmm.
is crucial if you want to build long-term wealth,
And it's not just about getting out of debt. It's about understanding the opportunity cost
Yes.
of that debt.
What you could be doing with that money
Exactly.
if it wasn't going towards interest payments.
Exactly. Yeah.
All right. So we've covered the mindset piece, the getting out of debt piece.
Yeah.
Now let's get into the meat of it, the investments. So he's got 5 investments that he recommends owning for life. And the first one, he jumps right into real estate.
Okay.
Real estate for residential purposes.
Yeah, he's a big proponent of owning tangible assets.
Yeah.
Things you can actually, like, touch and see.
Yeah.
And real estate definitely fits that bill.
It's hard to argue with that, right?
Right.
Like real estate's been around
Forever.
forever. It's
Right.
going to be around.
Yeah.
You can see it, you can touch it, like it has inherent value.
Yep. And
Yeah.
he does a good job of, like, walking through an example, too. So it's not just, like, this abstract concept. He actually gives, like, some real numbers.
He does, yeah. Like
Yeah.
he uses the example of buying a property for $100,000,
Oh.
renting it out for $1,000 a month.
Okay.
And he highlights all the benefits of cash flow, tax advantages, like depreciation.
Right, right. And he doesn't sugarcoat it either. Like, he
Uh,
talks about the fact that, being a landlord,
It's not all sunshine and roses.
it's not passive income.
No.
There's definitely work involved. He talks about, the expenses that are involved, property taxes, insurance,
You have vacancies, you have to factor that in.
vacancies,
Yeah,
repairs,
yeah.
all of that stuff.
So he's not giving you like the rose-colored glasses version of it.
No.
He's giving you like the real deal, which I appreciate.
Yeah, it's very, like, balanced, I think.
Yeah, and I think that's important because you need to go into any investment
Right,
with your eyes wide open.
for sure.
Right.
Yeah,
And understanding both the potential upsides and the potential downsides.
totally.
But he makes a really compelling case for real estate, especially in terms of building that cash flow
Mhm.
that can then fuel other investments, right?
Right. And he talks about, like, the idea of using that cash flow to then
Yeah.
buy additional
Pretty
property.
snowball effect, right?
Exactly,
Yeah.
exactly. So you're using the income from one to fuel the purchase of another.
Yeah.
And it just keeps building and building.
That's the dream.
Right. And he also talks about how, real estate can be passed down
Oh, yeah.
to your heirs.
Legacy play.
The legacy play, exactly. And he mentions this thing called stepped up basis.
Okay, I got to be honest. That one went over my head a little bit.
Yeah. So basically,
Break it down for us.
imagine you inherit, like, your grandma's property, right?
Yeah.
Instead of inheriting her original purchase price from, like, 50 years ago,
Right.
the tax basis steps up to the current market value.
Oh, okay.
So it's like you're getting a fresh start
Interesting.
on that property for tax purposes.
So you're not penalized for like the appreciation that happened
Exactly.
during your grandma's lifetime.
Exactly, which can save you a ton
Wow.
in capital gains taxes, which is the tax you pay on the profit when you sell an asset.
That is huge. I never even considered that aspect of it.
Yeah, it's a big one.
Like the tax advantages alone are pretty incredible.
Yeah, it's a great example of how, like, strategic investing isn't just about making money.
Right.
It's about keeping more of it, too.
Keeping more of what you earn.
Yeah, exactly. For you and your family, yeah, it's wild.
It is wild. All right, so real estate, check. Let's move on to his second recommendation for a lifetime investment. And he says investing in the stock market
Okay.
as a whole,
As a whole.
not just chasing individual stocks,
Right.
which I think that's probably good advice for most people, right?
Yeah, it's really hard to beat the market.
It is. Consistently. Yeah. Over the long term.
Yeah, you might get lucky here and there
Right.
picking individual stocks.
You might get lucky, but
But over the long haul,
Yeah.
it's really tough.
and he's really advocating for like a long-term approach here.
Yeah.
He's not talking about day trading or anything like that.
No, this is like set it and forget it kind of investing.
Right. He's talking about like broad market ETFs.
Exactly.
Like he mentions VOO and SPY.
Yeah, those are both.
Which both track the S&P 500.
The S&P 500. Yep. So basically you're buying a tiny piece of.
Okay, for those of us who are not like, Wall Street whizzes,
Yeah.
break down what an ETF is again.
Yeah, so
Yeah.
ETF stands for Exchange Traded Fund, and it's basically a basket of stocks that you can buy and sell just like a single stock.
Got it.
So instead of trying to pick, like, the next Apple or Amazon, which
Wow.
is, let's be honest, really difficult
Very difficult.
to do consistently,
Yeah.
you're essentially buying a little piece of hundreds of companies.
Oh, so it's like diversification built in.
Exactly, diversification on autopilot.
I like that. I like that.
So with VOO and SPY, you're investing in like the 500 largest publicly traded companies in the U.S.
So you're not putting all your eggs in one basket
Exactly. You're spreading that risk
of it.
across the entire market.
Yeah. And his argument is that, while individual companies can obviously
Well, of course, yeah.
go up or down, the overall economy, especially, we're talking about the U.S. economy here, tends to like trend upwards over time, right?
Historically, yeah.
Historically, yeah. And so if you own a piece of the entire market, you're kind of, like,
You're along for the ride.
You're along for the ride, and hopefully it's a ride that goes up over the long term.
Exactly. You're betting on the overall innovation and growth
I like it.
of the U.S. economy.
Okay, that makes a lot of sense.
Yeah.
Okay, so that's investment number 2.
2 down, 3 to go.
3 to go. Let's do it. What's number 3?
All right, number 3 is gold, but he has a very specific way of looking at gold.
Okay, gold, that's an interesting one because, some people are like, gold is a relic of the past.
Yeah, it's a barbarous relic, yeah.
It doesn't really have any intrinsic value.
Yeah.
But he's not talking about, like, getting rich quick off of gold.
No. He sees it very much as a hedge against, like, worst-case economic scenarios.
What? Give me an example.
Like hyperinflation or, like, some kind of complete dollar collapse.
Right. So it's like it's not necessarily going to outperform the stock market
Right.
in like a normal economic environment.
Exactly.
But if things really hit the fan,
yeah, if things go sideways.
gold is kind of like your safety net.
Your safety net,
Right.
your
Your policy on your wealth.
Okay, I like that analogy.
Yeah, and he even says like don't go crazy with it.
How much are we talking?
Like 5-10% of your overall portfolio.
So a small sliver.
Just a sliver, yeah, just in case.
Just in case.
The world ends,
Right.
You've got your goal.
You're prepared.
You're prepared.
Okay, that makes sense. All right, so we've got real estate, we've got stock market ETFs, we've got a little bit of gold stashed away for a rainy day.
Or a really, really rainy day.
Or a really, really rainy day, yes.
All right, number 4. This one's a hot topic.
Me.
Cryptocurrency.
Okay, here we go.
I know.
So he's wading into the crypto waters. He is, and he's acknowledging the volatility right off the bat.
Right, because we've seen it.
We've all seen it.
It's been a wild ride.
Oh yeah, crypto's not for the faint of heart.
No.
But he's also he's intrigued by it.
Yeah, what does he see in it?
He sees it as this potential store of value.
Okay.
And a way to participate in this new evolving digital landscape.
So it's almost like he's drawing a parallel between cryptocurrency and gold in a way.
A little bit, yeah. They're both seen as potential alternatives.
Alternatives to
traditional currencies.
Okay, yeah, like fiat currency.
Exactly, like the U.S. dollar.
Yeah. That makes sense.
But he's also very clear,
Yeah.
do your research.
Oh, I'm sure, yes.
Understand the risks.
Because it is risky.
Very risky. Especially compared to something like, real estate or index funds.
Well,
this is speculation.
Yeah, it's a whole different ball game.
It is, yeah. You got to be prepared to buckle up and potentially
Lose it all.
lose it all. Yeah.
So he's not sugarcoating that at all,
No, he's very upfront about the risks.
which I appreciate.
Yeah, I think that's responsible
It is,
because there's a lot of hype out there
There is a lot of hype.
and a lot of misinformation.
Oh, yeah. So you got to be careful.
Yeah, you really have to do your due diligence.
Do your homework.
Yes.
Yeah, it's easy to get caught up in all the noise, right?
It is. It's like the Wild West out there
It really is.
in the crypto world.
Yeah, but it's also kind of exciting at the same time,
It is. There's a lot of potential
innovation. Yeah.
innovation. Yeah. It's going to be interesting to see how it all plays out.
It is. All right, so that's crypto. And then he gets to his final investment recommendation, and this one I think might surprise some people.
Yeah, it's a little bit different.
It is a little different.
It's investing in your ability to earn more.
Okay, I like that. So it's like investing in yourself.
Exactly.
What does he mean by that?
So he's basically saying lifelong learning is key.
Okay.
Whether that's acquiring new skills, starting a side hustle, investing in your own education.
So it's about increasing your earning potential,
Exactly.
becoming more valuable in the marketplace.
Exactly.
I like it.
And he speaks from experience here too. He talks about his own journey.
Yeah, he gets really personal in this video, which I appreciate.
He does. He talks about how he was in a corporate job and then he transitioned to building multiple businesses.
Yeah, he built a whole empire for himself, essentially.
Yeah, it's pretty impressive. And he's very open about the fact that it wasn't easy.
Oh, for sure.
He talks about the challenges, the setbacks.
The sacrifices.
Sacrifices, yeah. He had to, invest time, energy, money.
Right, so it's not like an overnight thing.
No, it's definitely a journey.
But the payoff, I mean, the knowledge and experience that he gained along the way, it's
Invaluable.
invaluable. Yeah, and he argues that, investing in yourself often has a higher return on investment than almost any other asset class.
Yeah, I mean, think about it. If you can increase your earning potential,
Right.
even by a little bit.
It has this ripple effect, right?
Exactly. It just
Yeah.
compounds over time.
Yeah, so that's a really, really powerful concept.
It is.
All right, so he talks about that, and then he shifts gears a little bit, and he gets really practical toward the end,
Yeah, he does. He gives like a ton of tips for like
like how to actually implement this stuff.
exactly. Yeah, like how to get out of that paycheck to paycheck cycle.
Right, because that's a real struggle for a lot of people.
It is, and he's very big on like understanding where your money's going.
Yeah, track your spending, right?
Track your spending. He's a big fan of budgeting.
Budgeting.
He even suggests like using a budgeting app.
Yeah, there's so many great ones out there now.
There are. Yeah, there's no excuse.
Yeah, it makes it so easy.
Exactly. So he's all about like automating that stuff too, automating your
Oh,
savings.
yeah, set it and forget it.
Set it and forget it. Yeah, so you don't even have to think about it.
Just make it automatic.
Exactly. And he has this great tip about opening a separate bank account
Oh, yeah, I've heard of this.
specifically for your emergency savings.
So you don't even see it.
Exactly. So you're not tempted to touch it.
It's like it doesn't even exist.
Exactly. Out of sight, out of mind.
I like it.
It's just a little mental trick, but it can be really effective.
It can because, yeah, if you don't see it, you're less likely to, like, dip into it.
Exactly.
So those, like, I need to buy those shoes kind of moments.
Exactly.
And then he talks about the $1,000 challenge, which I thought was really interesting.
Oh, yeah, this was cool.
So he's basically saying, like, okay, if you have $1,000, how can you make that money work harder for you?
Yeah.
And he gives, like, a few different options.
Right, like the obvious ones.
Yeah, like spend it. Yeah, spend it on, I don't know,
a nice vacation or
a vacation.
you
Yeah.
could save it.
Put it in a high yield savings account.
Yeah, okay.
Which is fine.
It's not bad, yeah.
It's not bad.
Or you could invest it, put it in the market.
Mm-hmm.
But then he kind of challenges you to think about it differently.
Yeah.
It's like, what if you invested that $1,000 in your education
Yes.
or in a business idea?
Yeah, something that could potentially generate more than just like
Right.
a small return.
More than just like the standard interest rate.
Exactly. He wants you to think bigger.
Yeah, think outside the box. Yeah, think long term.
Long term, yeah.
What's going to have the biggest impact down the road?
I like that a lot. That's a really good way to frame it.
Yeah, and then he gets into dividend investing a little bit.
Okay, so that's where he's talking about like investing in companies that pay you a portion of their profits.
Exactly, yeah. So you're getting paid just to own the stock.
I mean, who doesn't love getting paid to own something?
Right. Sounds like a pretty good deal.
It does sound good.
But he does give like a little bit of a warning.
What's that?
He's like, don't just chase the highest dividend yield.
Okay, so explain what dividend yield is again.
Yeah, so it's basically the annual dividend payment divided by the stock price.
Okay,
So it's like a percentage.
got it.
And it can be tempting to just like go for the highest one, right?
Right, because it seems like you're getting more bang for your buck.
Exactly.
But he's saying, like, hold on a second.
Hold on, pump the brakes a little bit.
There's more to it.
Because if the underlying company isn't financially healthy,
Right.
that dividend could be at risk.
Oh, so you could lose your shirt chasing dividends.
You could, yeah. So he talks about like the importance of looking at a company's dividend history.
Okay, so like, how long have they been paying a dividend?
Exactly. Are they consistently increasing it?
Got it.
Are they like, cutting it every other year?
That's probably not a good sign.
That's not a good sign.
Yeah, you want consistency.
Consistency is key. And he also mentions like dividend-focused ETFs.
So you can get that diversification even within the dividend space.
Exactly. You're not just relying on one company.
Right, spread that risk.
Spread the risk, yeah. And ultimately, he says, like, do your research.
Yeah, that seems to be like the common thread here.
Always do your research.
Do your homework. Don't just blindly invest in something
Exactly, and understand the business.
that you're investing in.
Exactly.
Don't just look at the numbers,
Yeah, like actually understand what they do.
what they do, yeah.
Read their financial statements.
All that good stuff.
Yeah, be an informed investor.
Be an informed investor. I like it.
Yeah.
All right, so we've covered a lot of ground in this deep dive.
We have. It was a good one.
It was a really good one. We talked about mindset, breaking free from debt. We went through his 5 favorite investments.
Tangible assets, index funds,
Gold,
crypto, investing in yourself.
investing in yourself, which I think is so key.
Yeah, that's a big one.
It all comes back to that.
It really does.
Like taking control of your financial future, creating the life that you want.
It's all about empowerment,
Empowerment, yes.
taking ownership.
And I love that he doesn't shy away from the psychological aspects of money either.
Oh, yeah, he goes there.
Because it's not just about, like, the numbers. Right?
Yo, it's so much more than that.
It's about our beliefs, our habits, our behaviors.
The stories we tell ourselves about money.
The story, yeah, and he talks about how, like, we all have these money scripts that we've picked up
From childhood, yeah.
from our parents, our families, our culture.
Society in general.
And those scripts can either be empowering or limiting.
Totally.
And it's really about, like, becoming aware of those scripts.
Yeah.
And choosing to rewrite the ones that no longer serve us.
Yeah, exactly. Don't let those limiting beliefs hold you back.
Exactly. And I love that he encourages people to, surround themselves with positive influences.
Yes.
Like read books, listen to podcasts,
Find mentors.
find mentors, people who are already where you want to be.
people who inspire you.
Yeah. And who can offer guidance and support.
Yeah, because you become who you hang out with, right?
It's true. So if you're surrounded by people who are constantly complaining about money
Right.
and saying, oh, we can't afford that,
Yeah.
that's going to rub off on you.
It's going to rub off on you. Yeah, you're going to start adopting those same beliefs.
Exactly. So it's really important to be mindful of who you're spending your time with.
Yeah, your energy vampires, got to get
Mhm.
rid of them.
Got to get rid of them. All right. So we've covered a lot, but if you had to pick like one key takeaway,
One golden nugget.
one golden nugget from this whole deep dive, what would it be?
I think for me, it's that financial freedom is possible
It's possible.
for anyone.
Is that just for the wealthy or the lucky?
No, it's not some elite club.
No.
It's achievable if you're willing to put in the work.
The work, yeah. And it's not always easy,
No,
but it's definitely worth it.
it's so worth it.
And you know what? You don't have to do it alone.
That's right. There's a whole community of people.
Yeah. Find your people
Find your people, yeah, who are on the same journey.
who are rooting for you.
Exactly.
All right. This was fantastic as always.
That was fun.
It's always a pleasure to unpack these videos with you, and hopefully our listeners got a lot out of it as well.
Yeah, we threw a lot of information at you today.
We did.
So if you need to, like, rewind, listen to it again,
Take some notes.
take some notes, yeah. And most importantly,
Put it into action.
take action, even if it's just one small step.
One small step.
It can make all the difference.
Absolutely. All right. Until next time.
See you later.